All right. Well, this is we're at our wrap up for this year's conference, which is it's hard to think because this has been just a constant flow of information and data and perspectives, and I think that's what makes this conference so great. But I'm really pleased to introduce right now John Ryan. You know, John is the president and CEO of the Conference of State Bank Supervisors. I've known John for a number of years, and he was really an original thought leader on this conference, and saw the need to bring research and all these perspectives together into one event each year. And I'm pleased to welcome John right now, who's going to provide the wrap up for this very interesting 2020 conference. John?
Thank you, Jim. Hopefully you can hear me. All right. This has been a terrific conversation, and I'm going to go off script a little bit here and say the thinking behind the conference from the very beginning is stepping back. We talk about banking in some very technical ways, regulations, examination, but the thought and the purpose behind bank supervision and a banking system, a banking regulatory system that supports this, is the hope and promise of a better future. And the conversation that we've had over the last 2 days really speaks to that. How can we have a better future at state, local level, and as a country? So thank you to the last panel, and thank you to everyone. So I'm here in Washington, D.C., and I really appreciate all of you joining us for our virtual conference. I do wish that we were meeting in the shadow of the famed Gateway Arch at the Federal Reserve of St. Louis, but these past 2 days have shown that we can still gather online to listen and learn as academics, policymakers, and bankers share and discuss research findings on community banking. This research is important, and I think the events of the last 9-10 months have really demonstrated its importance. It puts facts and figures on community banking that informs policy. During this conference, we've heard how those facts and figures, illuminated by observations from bankers, from regulators, from other academics, have real consequences. A few takeaways. This is always one of my takeaways, but there are a few examples from this conference. And that is that proximity matters. It still matters. We just heard on this last panel about the proximity of branches. We often talk about that we're in a virtual world and we won't need branches, but the location of branches still matters. We've seen that in past research around small business lending and the success of small business relative to the distance of the branch making that loan. We heard in research yesterday that while it's been almost 20 years since Hurricane Katrina, that there's still some very timely lessons. Local banks, unlike large banks, didn't have to divert financial resources to affected areas, which preserved their local markets in the undamaged areas from reduced housing prices and slowed construction lending. Customers matter. And this is the chicken and egg conversation that we heard from Rashunda. And part of that is that we learned that small business plays an important role supporting the community banks. It's not just community banks supporting small banks. With a paper drawing on direct connection between policymakers' support for small businesses and the health and growth of the community bank sector. Relationship lending matters, and we've heard this in a variety of ways. The research panel that we heard earlier today revealed that more low-income borrowers from this research were able to gain mortgages because small banks can base their loans on more than just a checklist. And in that research, there also were some interesting finds about the proximity of the bank as well. So it's not just a small bank issue, but it's a proximity issue. Also, I think a takeaway is that the COVID crisis has highlighted that community banking has been a strength and a feature of our banking system's response to the COVID crisis and transmission of the Paycheck Protection Program. Across the nation, community banks pivoted to make sure their customers still had access to services despite stay-at-home orders. I've heard countless stories about the long hours and dedication of community banks in ensuring that their local businesses could survive by accessing the Paycheck Protection Program. It bears repeating that community banks made $196 billion in loans specifically under the PPP, which represented at least 30% of all funding provided under this program. As FDIC Chairman Yelena McWilliams succinctly put it, community banks have punched above their weight. The question now is, what comes next? And our last panel was asking us that. What important issues to community banks should we dive into over the next year? I believe our last panel challenged us in a couple of those areas. And I'd also point to the survey results of the CSBS Community Bank national survey for some clues. The results from this year's survey show that community banks are still frustrated, we saw this last year, with core service providers and the technology offerings generally. Consider 40% of respondents were dissatisfied or highly dissatisfied with the cost of in-house or external delivery of core processing services. You have to ask why, as was also revealed in the survey, that more than 2/3 of banks are still with the same core provider they've had for 10 years. So high level dissatisfaction, but 10 years with the same provider. Oh, a clue was provided in another question in the survey, and that is that the expense of terminating a contract and the expense of changing providers is a major inhibitor. Cost is also an adoption with emerging technologies. Our survey has shown a growing trend of community banks embracing new technologies over the past couple of years. This year, 73% of respondents ranked the adoption of new or emerging technologies to meet their customer demand as important or very important. However, the actual number of those offering digital and online services remains largely unchanged. And again, the survey indicates that cost is a significant reason. And we have yet to plumb the deep area of potential research, any lasting impact from the pandemic. One banker told us that the loans during the pandemic were, and quote, never transactional matters. We were presented with several opportunities by bank customers who simply couldn't get a loan from their large corporate-style bank. I raised these three specific issues because I hope the survey results identify areas for future research. And why does this matter? Because the research we have seen has shown how much the community bank model means to their customers and to our nation's small business infrastructure and to our nation's communities. As President Bullard noted, good research leads to better policy. I have tremendous faith in the future of community banks. Consider the panel of students who didn't just win this year's CSBS case study competition, they joined the system. 3 of the 5 students are now working for community banks, and another hopes to join one when he graduates in December. The 5th student just started today with his new job. Just started this week with his new job with the Mississippi State Banking Department. So congratulations to him and to Roshenda. I look forward to building on this research and learning more next year, hopefully when we meet near the Gateway Arch. I'd highlight that next year's community bank competition will highlight lessons learned from the COVID crisis and lessons learned around our challenges of diversity, inclusion, and race. So I'm very interested to see those student submissions. Again, thanks all of you. Greatly appreciate your participation.
Great. Thank you, John. Wow. Well, this concludes the 2020 Community Banking in the 21st Century Research and Policy Conference. I'd like to thank all of you, our attendees, for your engagement and your questions. and your participation and your support. I'd certainly like to thank the FDIC, the Conference of State Bank Supervisors, the Federal Reserve Board of Governors, and the Reserve Banks for working together each year to bring this conference together. And I'd like to thank all of our researchers, our panelists, and our presenters for giving us information to react to think about, to discuss, and debate.